secondary levels. It's something I've noticed, particularly in the DAX. I think it works in a lot of markets though, that rather than going for the obvious level, everyone can see certain levels. And so for that reason, you get really obvious trades on them, which don't always work. And people wonder why the obvious trades don't work. Why didn't this bit of support turn into resistance? It did a little bit here, but on the way back up, doesn't manage to. I find that often the better entries are on secondary levels. So this is the secondary level here, comes in at 72. DAX, as we come back up in the afternoon, that high there is 72. Holds it nicely, drops back down to previous high, down to 46. So it gives you a nice sort of short-term trade. I'm not talking about these for much, much bigger moves. Excuse me. Particularly on a reversal, you know, this move back up, you're taking a totally counter trend trade there on this secondary low. But they're the kind of things that you want to be looking for. What happens effectively is, as the market comes up, we trade the 59s. Everyone goes, yes, 59s, previous low. I'm going to sell that, even with a little stop at 62. Thinking, yeah, that's fine. Sell 59, stop above 62. We'll be fine here. What then happens is the market pushes a little bit more. Those positions get pushed out and the market stalls at the next low. So those 72s. That's the point where slightly larger participants are more willing to sell the area rather than just the one price. And so there is still selling pressure from 72s. For that reason, you get a quick push up, stops out the few people that are short 59, 62 area, and then starts to back off. We saw the same for the move higher as well today, and I'll show you this on replay in a second as well. What we got, this was the head and shoulders, and this is on a 5-minute chart. Now, the head and shoulders neckline comes in at 93. This high here is 95, and this low, this secondary high comes in at 89. So that's the thing that you want to be looking at, because as it comes down to retest the neckline, it starts to look very, very weak as it comes off. So anyone thinking, yeah, I'm just going to buy 95s or even 93s could very easily get stopped out on the quick flick through, thinking that this isn't a great trade. Whereas if you're aware of these, or this sort of nuance within the market, gives you the chance to buy the 93s and perhaps split your orders and buy the 89s. That way, one, you're getting a better average price, but two, you're also limiting your risk a little bit. And also staying very aware that the market is often going to do this type of thing. So just allows you to execute slightly better with the awareness that this does quite regularly happen, particularly in the DAX. Gave you a very nice entry at 89. As soon as you've got that entry at 89 and you get the move back above the head and shoulders neckline, you're then in a very comfortable position. Not only are you obviously on side as you go through the neckline, but even if we start breaking back through the neckline, you're still going to be on side, whereas other people are then starting to get under pressure. We're going to have a look here on a 1 minute. So this is exactly how it plays out. You get the break up. So this was the first break of the neckline, up to 15s. Then we start to pull back, and it's this pullback that then starts looking very, very aggressive. That starts getting people doubting the move. You get the quick chop straight the way through 95s, the neckline, whips down towards 89s. That's where you get your entry, and then you get the second move up. In terms of exits, I am going to be looking at this first area at 15s, but really the main target that I'm looking for is the fill of the single prints. We get into the single prints on the break of the head and shoulders. So once into those single prints, you are then expecting the move right the way through to fill all the way to the top, which comes in at 11,930. So whip this up on a replay for you so you can just see how exactly it did actually trade. And here we go. So I've got the bids in ready, and this is where you can sort of, get your orders ready. Most people buying these 94s are now thinking, right, I want to see this up. I want to see this market start trading higher. Sit still, you get a bit of size comes on the offer, trades through, and you think, yeah, this is all right now. Now we're expecting a little bit of move to the upside. Trades back down once again. Now people are starting to get a little bit worried. Then you get a fast drop down. And that is likely to get quite a lot of people out of the trade. Again, you've got the size comes in on the offer. That's not looking particularly comfortable, but being very aware of that previous high at 89s, you can stay in the trade. Yeah, you've gone 2 ticks offside. In the DAX, that's pretty tight risk. 2 ticks. I'd be looking down in towards this low volume area, stop down towards 85s. Remembering that you're looking to buy 91s and you're going to try and run this to 30s. So a stop of 6 ticks for a potential 40 tick winner is quite an acceptable risk. You're then looking for your move right the way up towards 12s. We get first little push up towards 01s. This is where you have to be patient and start trusting the trade in DAX. The beginning of the move is often quite stuttered. Market's still trying to work out if it really is going to break and hold above that neckline a second time. Because we're getting in on this candle here, not on any pullback here. So that's your first that's your entry on those 89s. That's where you're trying to stay in the move. And then you're looking for that continuation. So we have now got the close back above 95. So that's adding a little bit to this. You can now really be thinking, if you wanted to be very tight risk-wise on this, you could have your stop on any close back below the neckline or even any move back below 95s, which is still going to give you a small profit down at 93s. Keeps your risk very tight, and then we start the continuation higher. And that's going to be your first target, 15s. And then you're going to be looking for 30s. This is where it starts to test people in the DAX. It will often sit quite still for a little while. Once it's got the move going, it then sits quite still. And this is where it becomes very tempting to get out of the position. We've traded 15s already. You've now got a 50 lot support in the move as well. But what you have seen all the way through this move is these bits of size in the DAX have often traded back through. And exactly again, you see it trade back through, get a very, very swift move back lower, and then we start to push on back towards those 15s. But the key thing there was all about understanding where these secondary levels are, so it doesn't worry you when you first get the stall down at 94, which looked like a lovely entry. It started to bounce, it sat still, whipped through, and that whip through down towards that secondary high is your chance to get into the move. As long as it doesn't break the secondary high, you should then be set up for the move higher. And that's the key thing, particularly if it does it on a whip through. Does it on that whip through, that is basically people who've bought it exiting the trade. There's no continuation because all it is long positions getting out. As the market starts to come back up, people re-enter thinking, right, now the move is on. Now we've got the close back above the neckline. Now we can get the move higher. And that's exactly what you get, that move up towards 15s. And we then, on this move here, get it right up to fill those single prints as well. And this, in fact, in the end, ended up moving us right the way back up towards 72s.